The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Good morning, folks. Steve Rhodes filling in once again for Larry. I'll be doing the same thing tomorrow. I believe Larry is back with us on Wednesday. So thanks so much for being here. Hope everybody had a great weekend. Of course, today is Monday, October the 16th. It's now about 9 o'clock in the morning. As we take a look at what's going on in the pre-markets, we've got all of the U.S. equity futures are trading lower by about 0.4%. The NASDAQ is off 0.6% or 50 points, trading down at 78.59. We'll certainly take a look at the equity markets overseas. Last night, you had the Hang Seng and the Shanghai finish lower. Really, the Shanghai was the one that was down the most, off 0.8%. The Shanghai was flat. It was the Hang Seng that was down 0.8% out there. The Nikkei up 228 points, a little over 1%. So a mixed market over there. Australia finished higher, it finished higher. Well, it was basically flat, $4 to the upside. The DAX in Germany is trading off 0.6%, and the FTSE down 0.2. You've got gold up about $10, $960 to be exact, 1509.10. Silver's up 33 cents. That's nearly 2% to the upside, 1790. We'll take a look at those. Of course, light sweet crude. We'll begin by taking a look at that. That's up right now 10%, which is it was up about 16% light sweet crude. Brent was up nearly 20%. Natural gas up 6 pennies, 2.5%. The 30-year Treasury is up nearly 1 point right now. The 10-year is up 12 ticks. So we've got plenty to look at. Of course, I want to look at what you want to look at. So let's begin by taking a look at light sweet crude. And really, for the last several weeks, I believe it has been, certainly all of last week, as we took a look at the light sweet crude contract, we were saying, hey, you know what? This looks more like a consolidation than anything else. And really last night or this morning's action has proved that to be the case thus far. Now, when I say prove that to be the case, our price target to the upside has always been where price most recently broke down. That was $63.14. If you're watching us on Tiger TV, you're going to see a solid green line, horizontal green line. Over on the left-hand side of that line, you see 63.14. That's the high of that session. Now, the high of that session, which was a trading day of May 22nd, that began the TD setup 9-count pattern that identified, it identified actually the bottom. It did it as it was supposed to, either bars 8, 9, or the bar following 9. And that's what occurred back here on the trading day of June 5th. But what it also established for us is where price broke down. So we take a look at, when in a counter trend rally, and that's all we have right now. So for those of you thinking, the sky is the limit in light sweet crude, be careful. Because what's taken place so far as of 9:09 a.m. is nothing more than what we were talking about last week before there was an attack on the Saudi Arabia oil facility out there. So 63.14 is the key number. Now, I'm not saying that price won't close above that. I don't know whether it will or it won't, but so far the activity that we've seen here is prices just simply tested resistance. Light sweet crude trading between 63 and 52 out there. The 51.84, that's the TDST, that's the Tommy DeMark set up a trend line established by the breakout level. So that was 51.84. That becomes our consolidation. Now, look, if price closes over 63.14, then it is a change in trend signal out there. But right now, nothing more than your good old-fashioned sideways consolidation move. And we needed that to take a look at that chart versus these charts here. Not that these aren't helpful, but these charts aren't going to identify that TD setup trend line level that you and I look at. Where did price most recently break out or breakdown for the respective time frame? We were taking a look at the daily time frame chart for light sweet crude. Here we've got the market profiles. So the 1 hour, the 2 hour, the 5 hour, the daily, and the weekly. Prices above the daily profiles and really the weekly profiles out there. But what you and I know, which is really important, is where price most recently broke down. That has contained price. Now, what happens if price closes over 63.14 out there? Now, this is going to have a different set of profiles, the white charts, my Ninja Trader charts, than the e-signal charts. Those are in the black panel. But what we would say here is let's forget about the profile levels that are there. A close above 63.14, and then what you and I would look at, we'd look at two things out here. The first is that we take a look at where light sweet crude on a weekly basis most recently topped. That was on the April 26th bearish engulfing key reversal session out there. And that says that the high of that session, which is 67.19, would become the next resistance level. That's a close above 63.14. Any move above that, well, that would set up an A to B equals CD pattern. We could take a look at that. But it also says 74.64, the weekly breakdown level. So the A to B equals CD pattern, out of curiosity, where does that come in as far as price? That gives you a price projection, a 1-to-1, at about 73.64. 74.64 is the TDST breakdown area. So it's relatively well mapped out for you and I with regard to what light sweet crude has done, is doing, what it needs to do in order to suggest higher price out there. Let's not get caught up into the fact that we've seen the largest one-day, of course, the trading session isn't over, but the largest one-day potential increase in price out there. That means nothing to you or I. It means nothing to you or I from a trading standpoint. What it's always all about is identifying support and resistance and being able to identify tops and bottoms. I mean, that's really the lock that you and I are always trying to pick, so to speak. And what we did was our charts picked out for us where there was resistance in light sweet crude. And what we know is price has tested and rejected that resistance level out there. Now, a question that came in from Maria inside the Tiger's Den. Maria wanted to take a look at the Treasury bonds out here. So we're in the December contract for the 30-year bond. So let's go take a look at it. And in doing that, we're going to do several different things out here. So let's do the same thing. Let's put up the 60, the 120, the 5-hour and the daily time frame charts here for Treasury bonds, daily, which would have the weekly as well. Now, because it's just rolled over out here, it sort of makes the daily contracts, e-signal, TAS market profiles. Well, look, prices trade below the bottom of the box. Let's just stay there with that. The profile levels are solid for the 60, the 120, and the 5-hour time frame charts out here. Okay, so what is this telling us? Really not a whole hill of a lot of beans out there. So let's go look to where there is a hill of a lot of beans. And when we take a look at the hill of a lot of beans, so when you now take a look at the 30-year Treasury, right, you were just watching, you were just looking, you were observing. For those of you that have been listening to either my Trader's Ed show, 1 o'clock, or while I've been filling in for Larry, and we've been looking at light sweet crude, you go back and look at the archives, you'll see that 63.14. You'll see that we've discussed that. So that being the case, if you take a look at this 30-year Treasury chart out here, where is it that you believe price is targeting to the downside? In other words, where would be the best buy area out here? And the answer to that question is the breakout area. And the breakout area established by that TD setup 9 count. That level is 153 and 27/32 out there. Now we come back from this break, you and I must study this chart a little further, because what we will see is that Friday was day 8 of the TD setup 9 count. And it could be as far as 8, 9, or following 9 that could identify the bottom. And right now, it's last Friday's low. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So a quarter century ago or so, Tom DeMark noticed and developed this system. This is the TD 9-count pattern that we're taking a look at. And that pattern, just look at it. It's easy, especially when you're on longer term charts like a daily or weekly, monthly time frame chart. Very easy for you to be able to track this system. And all you're looking at is you are looking at a current bar's close. So whether it's to the upside or the downside, let's take a look at the downside moves out here. So we're still looking at the daily time frame chart for the 30-year Treasury. And what we're doing is we're comparing the close of any bar. So let's say right now I'm looking at the bar from, well, let's look at the bar from September 1st out here, September 4th. That bar you'll see has the label of 1 underneath it. What that close of that bar on the 30-year Treasury on that day of September 4th is comparing the close of the bar 4 bars earlier, 1, 2, 3, 4. So we can see here that the close of bar number 1, or the date of September the 4th, was below the close of the bar on August 28th. And what that generates is bar number 1. We don't know whether it turns into anything. It just becomes and is labeled as bar number 1. When you take a look at the following day, that was September 5th, its close was below the close of the bar 4 bars earlier. 1, 2, 3, 4. That takes us to August 29th. So you can clearly see visibly that close. It's all about the close. It's close versus close, whether you're counting to the upside or you're counting to the downside. And you just continue to do that. You're always comparing the current bar, regardless of time frame, and you're comparing it to the close of the bar 4 bars earlier. So you must wait for the close of a bar in order to be able to properly label the counts. So that's how the bars are identified and counted out there. It's the simple element of the TD setup sequential or combo system, or many other tools that Tom has developed out there. But when I say it's simple, it's what's nice about it is it's relatively easy to identify and spot and label, but it also provides us with that breakdown and breakout level. Now, Tom, I don't think really talks about it like that in his books. I don't recall him speaking about that, but he does identify those as trend line support and resistance levels. when I began learning technical analysis, when it was I began that journey with Tom O'Brien, and then the next person was Larry Pesavento. So it's apropos to be filling in for Larry today. But originally, when I had been taught about breakout and breakdown levels, it was all about the swing points. That's not to say that the swing points don't provide us with information. But what I've been able to identify, just like we did, the charts did. So it's basically going through thousands of charts. And being able to have this tool automated has allowed me to easily go through thousands of charts, multiple time frames out there, to be able to identify those breakout and breakdown levels are the beginning, they're the high of the TD setup 9 count, the high on a downside, and the low of that count, because it doesn't have to be bar number 1, really becomes what I like to now refer to as that breakout or breakdown level, and where price would pull back to its breakdown level. So that's why 153.27 remains that area. However, what I've also been able to identify from a pattern standpoint is if you get a TD setup 9 count that occurs prior to getting back to the breakout area, that's relatively strong. And so that relatively strong or strength out there would be a reason for anyone to be taking a look at, possibly if you were short, certainly adjusting your stop, maybe taking your profits. It doesn't guarantee that there's going to be a bottom. So let me make sure. And remember, or maybe I didn't say that during this segment here, but in this case here, the TD setup 9 count, by the way, so knowing that the close of today, how does that get labeled with count number 9? It must be a close below the bar labeled number 5. That is the bar out here from September 10th. That price point out there was 161 and 15/32 out there. It looks like that will occur. Now, with today being an active 9 count, what we know about this pattern is that the bottom or the low can occur on bars 8, 9, or the bar following 9. If that low were going to be on bar 5 or 6, and to me, even though you can get to the 9 count, to me it's not it's less reliable that it's going to form a bottom out there. It's just less reliable. Doesn't mean that it can't or it doesn't. It's just my observation looking at thousands of charts out there with regard to this pattern. And so on a TD setup, top or bottom out there, well, there's really 3 things that are going to take place out there. Now, this kind of seems like you're just fitting the whole bill, right? I mean, well, you'll hear that when I say it. One of 3 things. You can either just simply have a little bit of a hiccup. And hiccup means 1 or 2 days, a little sideways-ish type action. A hiccup, and then continuing in that trend. And once you get below the low of that valid TD setup count out there, boy, that tells you've got real momentum. Well, in this case here, if that's the way that things were to unfold, what we also know is that doesn't mean that 153.27 is going to go away as support. That still becomes breakout support to the downside out there. What are the other 2 things? There could be just a prolonged sideways move, or there could be an actual turn, a change in trend. So how are you going to know if there's going to be a change in trend? See, that is an excellent question. And for those of you that would be considering closing out the short trade or taking a long trade, that's a real important question for you to answer. So how do we answer that question? What I like to do is just say, let's just use the same tools. Let's use the same tools. Let's use the same patterns. Now, in this case out here, all I'm looking at is a 30-minute version of Treasury bonds out here. And so if a change in trend is going to take place, whether it's a daily, a weekly, a 30-minute time frame, but we're now anticipating, hey, we may be nearing a short-term bottom inside the 30-year Treasury. Well, what's going to give us that signal out there? Well, for me, the signal would come from just using the same tools, the TD setup, support and resistance, or breakdown and breakout levels. And if we see it close above a breakdown area, in this case here on this 30-minute chart, it's very easy. It's identified. It's nice to have the automated version of the system out here. And it's 159 and 16/32. 30 seconds out there. Now, what we can see is an overnight action. We can see how Treasury bonds bounced up into that level. Didn't hit it right to the tick. That doesn't matter. But at 5:30 this morning, we saw price move up to that area and turn back down. Resistance would be where sellers are located inside Treasury bonds. Now, what we know right now about T-bond, just taking a look at the 30-minute time frame, is that it's trading between support and resistance. Support overnight, because on a 30-minute basis, it generated a TD setup 9 count. It was bar number 8, by the way, that identified the high. This was kind of a sideways-ish to lower type move out here. Moved lower into 4 o'clock this morning. So you can see how well this pattern works at identifying those shorter-term tops and bottom changes and trends. Take a look at back here at 8 o'clock in the morning, at 1:30 in the afternoon, 8 o'clock. At 1:30 in the afternoon on September the 12th, it was a TD setup 8 count that valid pattern out here. 8 was the low of that pattern. We saw that sideways-ish type move out there. So this is helping you identify the 3 different patterns that will unfold. You can't really take a long trade or close out your short trade in T-bonds, in my opinion, till you see a close above 159 and 16/30 seconds out there. Steve Rhodes with TFNN, and that, my friends, is the TD setup 9 count. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Markets open. The Dow trading down 111 points. S&P off 12. NASDAQ off 57. Russell's down 7. So all of the U.S. indices in the red at the moment. Spot volatility index still well below its 50-day exponential moving average, up 9.5%, trading out at 15.05. Gold's up 10. Silver is up 36 pennies right now. So Alex writes, and by the way, I think I forgot to tell you, we'd love to hear from you. You can give me a call at 877-927-6648. If you can't call in, please go ahead and you can send me an email, steve@tfnn.com. But like Alex did here, please put radio show question in that subject heading. Makes it very easy for me to spot your questions. And then, of course, inside our Tigers Den, any ping will do. So Alex writes in. Let's take a look at Alex's question. Alex writes in and says, hey, Steve. Hey, Alex. Is there any index that is now a short? Any index that is now a short. So let's take a look at the NQ. And we say any index, right now, because with the market open, I can't put all of my charts. I've got, at the next break, I'll try to start up some of the other cash indice charts. But let me just, Alex, take a look at the 4 U.S. equity futures contracts. So we've covered the S&P, the NASDAQ 100, the Russell 2000, and the Dow. We're going to focus in on the NQ right now. So as we take a look at the NQ, which is trading down about 0.7%. Not the lowest to the downside. The semis are up 1.5%, or about 23 points. But let's take a look at the NQ right now. So what do we know about the NQ? Here's what we know, and maybe it's hard to see. No, it's not hard to see. It's easy to see. So after spending that last segment, taking a look at the TD setup 9-count pattern, here's what we know. On the trading day of September 11th, the NQ formed bar number 9 because that close was above the close of bar number 5. Okay, but bar number 9 here, and bar number 9, by the way, was the high of all of those sessions, but it was really the bar following bar number 9. That means last Thursday, September the 12th, that qualified as the TD setup 9-count. Now, we didn't know if it qualified until Friday, because Friday was a lower high out there. Now, whenever there's a topping pattern, what I want you to think is that that topping pattern says that sellers then should be able to push price down to support. Remember, the whole secret to this game is being able to easily identify support and resistance out there. There's really 3 things that you and I use, or I should say there's 3 things that I use, and now you and I use to help us do that. The TD setup 9-count, breakdown and breakout levels. We've already gone through that. Our TAS market profiles, you know that we use those, and certainly we're going to take a look at those as well. And we always look at Stevie's oscillator unchanged line. In fact, that is an extraordinarily important tool to help us differentiate the difference between just a retracement and a change in trend. You see, in the case of Alex's question, he's really asking about a change in trend, or I am interpreting his question, is there any index that is a short now that is really referring to, I'm going to say, the daily time frame, and is there a change in trend? Now, when Stevie's line turns from red to green or green to red, in this case here, the most recent change in color was from red to green. What that tells us, so that change in color tells us one thing. It tells us when we see that change in color that the price oscillator, that's now this bottom panel that you're looking at. By the way, that is the difference between the 39 and 19-day exponential moving average of price. Okay, you typically use a tool called the MACD. Basil Chapman uses the MACD all the time. Now, in using your MACD tool, make sure there is a setting that uses exponential moving averages. The original MACD tool, as developed by the brothers out there, used simple moving averages, and they didn't use 19 and 39. They used 12 and 26 out here. I use 19 and 39 for specific reasons, and I don't want to have to get into it right now. You use whatever numbers you feel appropriate. I will share with you using these numbers is extraordinarily appropriate and helpful in understanding what the market is communicating to you. Now, when that line changes color, it tells us of an impending meeting between that line and price. And it is that impending meeting that will then signal to you what the intent of the market is. A retracement is nothing more than a pullback to support. Stevie's red and green line, and it's green right now, which tells us that the price oscillator is above zero. I have an expression. There's nothing more bullish than a rising price oscillator above zero. So if we don't get caught up into the fact that the market is trading lower this morning, let's not get caught up into that emotion, but instead let's get caught up into the proper emotion of what is the market communicating to you and I? What is the clear message as of 9:35 this morning? The clear message is we've been anticipating price and Stevie's red-green line, the oscillator and change line, to test each other. Well, that's taken place so far. What we've seen is a rejection. By the way, that price level, for those of you not listening in or watching, I should say, of course you're listening, is 78.32. Alex, in order to generate some type of change in potential of a change in trend signal, you must see it close below 78.32. If I were to ask those of you in the audience that are watching us on Tiger TV, if we were to see it close below 78.32, where is it that you would anticipate price headed to? Of course, you would say, that's easy. It's that TD set out breakout level. 75, 68, 75. At this stage here, Alex, even though we have a TD setup, 9-count top, what we haven't seen is a break of support. We've only seen a test of what we'll call support level number 1 on this chart here, which would be 78.32. Support level number 3 or 2 would be obviously the breakout level, 75, 68, 75. One could say you must see a close below that. I would be the one saying that. You must see it close below that for there to really be a change in trend. But in answering Alex's question, is any indices showing something that you could short? Well, if you at least close below support level number 1, 78.32 right now, Stevie's green line, that could then set up, and Alex would have to make the determination as the risk reward. We're trying to chase it down to 75, 68, 75. A close below that, that would be a significant signal of a change in trend. Of course, we must look at our TAS market profiles as well out there. We can't leave those out. That's one of the other 3 tools to assist. There's actually a 4th tool, but let's just try to keep it simple. The old KISS theory, everybody likes a good KISS. Keep it simple, Steve-O. So as we take a look at the daily profiles here for the NASDAQ, here's what we also know. Really, we've got, in essence, 2 competing patterns out here. Well, first, let's get to the daily profiles. What we can see here for the NQ is that what price did on Friday, what price did on Thursday out here, was price got up to the center of its bearish structured daily profile. And oftentimes that can be where price will stop because there's sellers there as well as the sellers up at the top of the box, which is 80.54. The center, which really isn't the center, it's more aligned closely to the top at 79.74. That's why Stevie used the terminology bearish structured box out here. And guess what? We also have a solid yellow square and a rect and a dash square box out there. What are those? Those are the consolidation levels. The consolidation in the solid area for the NQ out here. This is something that this is something Alex really needs to interpret out here. The NQ is still in a consolidation breakout, telling you and I right now that what price also wants to do is move up to the top of that consolidation, 82.15. The only way that this consolidation pattern fails is getting back underneath the consolidation. And right now, that would be a price level about 78.05. All that's happened overnight as well is price pulling back to test that consolidation. I am suggesting that those of you that are short, keep those stops tight out here. There is no signal to be short just yet, unless you're an intraday trader. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you'd like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Welcome back, folks. Dow's off 107, S&P down 11. And so we had a request to go take a look at gold from John in the Tiger's Den. So let's go ahead and specifically with regard to, what is it showing us using these same tools out here, the TD setup, support, resistance, or TAS market profiles, and anything else. So let's begin by taking a look at the daily time frame chart. So similar, but not exactly the same as Treasury bonds. We can see that potentially gold is in a TD setup 9-count pattern. Of course, today what gold would need to do in order to make that close, today being bar number 8, is gold needs to close below, in order for this pattern to remain, close below the close from September 10th. That level was 14.9920. We're at 15.08. What happens if we close above that? Well, these counts will not be there tomorrow morning when we take a look at it. And therefore, there won't be the potential of a TD setup 9-count pattern to the downside. Even if today does close below that, in order for the pattern to be to occur, you need to see a lower low either today or tomorrow or the following day. That low for the TD setup 9-count, in order to be able to identify what Stevie refers to as a potential bottom pattern out there, that low must occur on one of those 3 bars. But right now, as of 9:43, let's not get caught up into this 9-count pattern because it's not valid, because price is trading above the close of the bar 4 bars earlier. Now, we don't know is what the end of the day will look like. What we do know is that what gold did on a daily basis, it has done this a couple of times, as it created the Rhodes Momentum Indicator top. Price moving higher, doing less relative energy. You can see the bearish reversal candles out here. You can see the bearish engulfing, the shooting star, the 3-river evening star out here. You know that there are sellers that are lined up in gold. If you're questioning, are there sellers of gold, at least in terms of U.S. dollars? They're all sitting in the 1560 to 1567-ish type area out there. And in here, okay, so here, knowing that there's a confirmed bearish pattern out here, using the Rhodes Momentum Indicator, where is it that you believe that price would be pushed down to? It's very easy. It's where that breakout, it's where the last TD setup breakout began. That would be 1412. So based on this chart right now, without any kind of valid 9-count pattern, we're days away from that out here, it would appear that what gold wants to do is target 1412. Price is also below Stevie's green line. That's at 1538. 1532. Now, the price oscillator is above zero because the line is green, but this says a further retracement. Nothing more bearish than a failed bullish pattern, and nothing more bearish than a falling price oscillator below zero. Well, we have a falling price oscillator, but it's above zero. The line is green. That's what it tells us. Not trying to confuse you, but trying to give you the information. The summary of this chart, the daily chart, says 1412. Now, let's come back and take a look at the daily time frame chart for gold. Let's put on our TAS market profiles. And what do we know about our TAS market profiles? Well, here we've got both the daily and the weekly. Let me turn off the, let me do this one step at a time. It'll make it a little bit easier for both of us to take a look at. And let's turn off the weekly. The reason we're going to turn off the weekly, let's turn off price. One, I want to make sure that it's clear to you that the current profile that is in place is a bullish structured profile for the gold contract. It's bullish in structure because the center, where both buyers and sellers are, at 1506, is much closer in proximity to the bottom at 1499 versus 1536. This says that any close above 1506, we'll now call it 1511.70, the apogee pivot point, would suggest that price is on a closing basis, not an intraday basis. A close above this level would suggest that buyers should be able to push price up to 1536. A close below 1499.50, nothing more bearish than a failed bullish pattern out here, would suggest lower price. It would give us that, it would say that the price target that we're looking at 1412 is a real price target. It especially would say that with a close below that, whenever that might occur, and if that 9-count pattern is out of play. Now, let's also, I don't need to turn price on right now. I will, but I'm going to come back to my TAS market profiles and turn the weekly, because if 1499.50 fails, well, the question is, where's the bottom of the weekly profile? And the bottom of the weekly profile here isn't really that much further lower. Now, I know that is horrible grammar. I apologize. I've been up early. It's 9:46. Cut me some slack, would you? Okay, the bottom of the weekly profile becomes 1489, not becomes, but is 1489.20. That would be its last bastion of hope. If you see a close below that, well, then from a weekly basis, we can pull the gold contract over here. And we can see the 1489.20. We see Stevie's green line out there. But, folks, if you see a close below that, it opens up the kimono. And the kimono is 1286. I'm not saying that gold's going to head there just yet. If you see it close below 1489.20, you should prepare for that outcome. You should absolutely prepare for that outcome. Now, it's a weekly time frame chart, and we would spend our time on the daily first, looking for other patterns that might form out there. But that is the current message of the market. So what's the current message right now? Well, let's turn price back on. Right now, what we've got is, even though we have a confirmed top, we've got a consolidation that's going on, because price is trading with inside these profile levels out here. And until they get broken, totally broken out here, we did get a break of the daily profile that was back on September the 10th to signal to us that there was a change in trend. But right now, we've got a new profile, so we have new levels of support and resistance. We don't ignore those, and we are aware of the weekly time frame profiles as well out there. And so we've got just this little consolidation. It is interesting to Stevie that where the price advance stopped earlier today was at the center of the weekly profile, and that center box is at 1520 even Steven out there. That is where you would have expected in a counter trend move for price to actually stop. On a daily time frame, or I'm sorry, on an intraday time frame, do we have any signals there? Just so we were looking at the 30-year Treasury bond, and the answer is, well, we do have some signals. Look at this. In the counter trend rally overnight, you know, gold responding to the potential, I suppose, threat of some type of skirmish, war, whatever it might be. Let's face it, the wars over in the Middle East have been going on for thousands of years. Thousands of years. It's insane, isn't it? But let's not get into that. I could get into that. I would love to get into that, but we won't get into that. But gold reacting, knee-jerk reaction at this stage here, to the threat of something that may take place over there. There's going to be some type of response. We just don't know what it's going to be out there and who it's going to be against and who all's on board and not. But here's what we know about gold. Forget about all that. We already knew that gold had breakdown resistance on a 30-minute basis at 1516. Well, shoot, gold moved above that level right here at the time period of 2030, 8:30 last evening. Now, what Stevie likes to see when you get above a resistance or below a support area, if there's really a breakout or a breakdown going on, I like to see what's going to happen on the next bar, follow through, right? Without follow through in life, you got Zippo. Well, and what took place in gold? That very next bar on a 30-minute basis got right back down below that resistance. It never was a breakout. Now the question is, for gold on the downside, will gold close below 1495? That is that TD setup support. So we know that gold right now on a short-term basis consolidating between 1660 and 1495. So John in the Tiger's Den, there's your analysis about gold using those same sets of tools out there. Dow's off 110, S&P down 9, Russell 2000 strong like bull, up 2 points. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's kind of end the show by taking a look at the equity markets out here, where you start with a blank chart. Blank chart with the horizontal TAS daily profiles. Now, let's assume you don't even know what this chart is out here, and you just take a look at the profiles. What you're going to see is a brand new profile that is formed today. And when you take a look at the current profile, let me just simply go ahead and put a yellow rectangle box around it, make sure it's clear that we're all looking at the same thing out here. So we're looking at this area right here. You can see the brand new profile. Now, if you look at my data box, you'll see the top, the bottom, and the center. The bottom is 2972.80. Well, that kind of is a giveaway as to what we're looking at. The top is 3008, and the center is at 2999. What we know about the center of the box, where both buyers and sellers are, is that it is closer in proximity to the top. We know there's sellers sitting at 3008. This, by the way, is the ES Mini. If you're asking where's the price level that you'd want to go ahead and take a short position in the ES Mini, it'd be 3008. Or if you're short the ES Mini and you're wondering where your stop needs to be, it's got to be somewhere above 3008, where the sellers are at. It would be a close above that level that would have you go ahead and certainly exit that position, because nothing more bullish than a failed bearish pattern. And this is a bearish structured profile and box out there. Now, the ES Mini trading around 3003. Let's go ahead and add price back to it. You can see, so we're at 3003.50 out here. So watch 3008.25 today. Even though it says 10, it can't possibly trade to that level out there. It trades in quarters. And so watch 308.25. If there's a close in the ES Mini above that, then that says we're going to the all-time highs or higher out there. If you were to see a close below 2972.75, disregard that it says 80 out there, but a close below 2972.75 out there, that would say, okay, we may have a change in trend that is underway. And that is what's going on with the ES Mini out there. Folks, thanks so much for being here. Stay tuned. Another great hour of programming. You've got Tommy Sr., Tommy Jr. After that, you've got the TD Ameritrade Hour. And then you've got Basil Chapman. I'll be back with you at 1 o'clock and again tomorrow morning, 9 a.m. Thanks so much for being here. Hey, check out Mastering Probability. Get all the details on the homepage of TFNN.com. Take care, folks.